Good morning and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah and let's take stock of the global news flow and the market mood, which is not looking particularly sanguine. I must warn you this morning. But the global news flow first. It's not just markets at large. Luxury stocks took a beating, $30 billion hit as LVMH and Hermes led the slump. In fact, because of the LVMH rout, the world's richest man lost about $11 billion of his own net worth as well. Quite something, really. Oil extended gains to a third day after the Saudi energy minister warned short sellers of pain ahead. Now, if Saudi says something about oil, one should listen. Gold held gains as the fears of a looming US default support the safe havens thesis. And Asian stocks declined early morning as negotiations over raising of the US debt ceiling remain at an impasse. And that is the key point. The news flow around it is waxing and waning, positive one day, negative or neutral one day, if you will, not quite going ahead. And that's a bit of a problem, really, for how positional or overnight traders do with their positions. So, continuing from that, look at what the US markets did, the NASDAQ in particular, 1.3%, if I'm not wrong. Yeah, 1.26%. So sharp crack there yesterday. S&P 500 down. European markets were down. Asian markets are looking wobbly. And the other cues will come up on your screen next. The Dow, the S&P VIX or the 10-year yield at 3.7. Volatility went up as well. And the dollar index too kind of stayed steady at that 103 mark. The SGX Nifty, I would be really surprised if it's showing anything in the green. Yeah, 0.4%. It is indeed a wobble. Can it actually accentuate further is the key question. Remember, this week was arguably from a charts perspective looking like a week which could actually show gains and upper momentum, and we kind of did that a little bit in trade yesterday. The point is, will the global markets kind of play party pooper to that? So I would suspect that the trade setup, I would suspect that indices will follow global markets lower, and it's difficult to say if the dips will be bought into or no. Yesterday, I mean, so that's as far as the index go. It's a bit of a no go. And difficult to call whether what happens intraday. To be honest, I don't want to stick my neck out and predict anything. That's the job of somebody who actually follow charts religiously, and even that is difficult, by the way. Metal index has been showing some gains, but keep in mind, also in large part due to the gains of Adani Enterprises. So that is to be kept in mind. For today, when you look at the global scene and what could therefore happen here, vaccine-related stocks gained quite significantly in the US after China said that the vaccine thing looks like peaking but moving up till June. And everything out there from Moderna to Pfizer did very well. And you would well suspect that stocks like Reddy's or Cadilla, who knows, might have a good day. Oil upstream, because of what oil prices are doing, could also be resilient in the session today. And I would watch out for the Adani Group stocks. They remain in focus due to the GQG comments and the upward momentum that we've seen in those stocks. Now, what are these GQG comments, right? Yesterday, Rajiv Jain spoke to us last night and said that if others don't invest in the FPO, it doesn't bother me. I like the fact that index funds are selling because it helps us buy at good opportunities. Don't foresee the don't foresee issues in the Adani Group's ability to raise funds at all. I think there's a word in saying that don't foresee problems. So that's the point. He also mentioned that there are two types of, this is on India now, he's mentioning there are two types of markets, and more cyclical markets like Russia would be valued lower. Markets like India would never be cheap, as growth businesses would be more expensive, and India would have a lot of these growth businesses. We feel the growth story in India is getting better in a meaningful way. So constructive on India, uh, post his comments in his intent to be at it when it comes to the Adani Group infrastructure assets. You might well see these stocks continuing. And each is there's a bit of an upward momentum, and not just in Adani Enterprises, by the way, a bunch of other stocks as well, non-Adani Group stocks. Look at this set of names, more liquid names in the derivative space, doing really well yesterday. 13% for Adani End, volumes at 3 times the weekly average. Delta Corp, 6.1%, volumes at 5 times the weekly average. MCX, Balkrishna Industries, nearly 4.5 times weekly averages. Bandhan Bank was up 4.5% with 2 times the weekly average volume. So a clutch of liquid names having some pretty strong moves in trade yesterday, and would be interesting to watch what happens to them in the session today. What about stocks to watch today? I mean, there are a clutch of names which will react to numbers. Now, remember, Because there is a lot of results that came out. I'm choosing the ones which I think might have a reaction. I can't talk about everything under the sun, but let's try and bring up a lot of them nevertheless. So I'll start off with Biocon, which I believe was a good set of numbers. Revenues up 57% at 3773. The estimates were 3615. EBITDA margin at 26.4. The estimates were 23.9. Net profit up 31% to 313 crores. The Bloomberg estimate was 270 crores. So on all counts, it beat estimates. Biocon could be a stock in focus. JSW Energy, and decent numbers, you have to admit. I mean, it's difficult at times. I've seen now with JSW Energy, the variation in estimates is very large usually, but nevertheless, we're taking the Bloomberg consolidated consensus estimates. Their revenues were up 9.39% at 2669. The estimates were 2267. EBITDA margin expanded 27.91. Estimates were 26.7. Net profit was down relative to the quarter, but the higher compared to Bloomberg estimates. So a decent showing. Let's see what it does. We'll be talking to the management today, so that'll be an interesting conversation. Dixon, I thought, stood out for me. In this business, margins expanding is a decent thing because usually they don't clock in very high margins. Look at that. EBITDA margin was just 4% last quarter. The expectations were 4.7. They came in at 5.1%. Revenue growth was just a meager 3.82. Maybe that's not that great. But the net profit up 27% at 80 crores versus estimates of 70 crores was a pretty good number. So that is interesting to see as well. Some other good numbers before we come to the weak numbers in yesterday's session. So Bikaji Foods, I thought, was a decent number. Revenues up 15.49%. The estimates were higher, but the growth was lower than estimated. But 15% growth nevertheless. The point is on the EBITDA front, 61.84 crores versus estimates of 55.8. As a result of which margins expanded to 13.38 versus 10.14. Again, for a foods company on that base to expand margins is pretty credible. I think the street will like this. Net profit up 57% at 38.29 crores. Estimates were 33 crores. So good going there. Linde India, stand out. Revenues up 17%, EBITDA up 41%, margins 29.47 versus 24.65. No, the stock, yeah, my EBITDA margins at 29.47 versus 24.65, and net profit up 50% at 99.25 crores. What a splendid set of numbers. So I think it did well and should be in focus. Can we get Ashok Leyland before we get Amara Raja? If we can, let's do that. Ashok, thank you. So Ashok Leyland, revenues up 33%, which is very good. 11,625 crores. The estimates were 11,298. And EBITDA margins at 11% versus 8.9. The Bloomberg estimates were 10.3%. And net profit fell 17% to 751, but it was higher than the estimates of 629 crores. So that's actually a pretty strong number as well. Wholesale volumes were up about 26%, which is actually pretty good. And you know, I was just reading a note which said pre-buying because of RDE norms also played a part, and profitability is improved meaningfully, which is actually a really good sign. It is, you know, it's not now. It's no longer a cheap stock, but it's a stock certainly in focus in the session today. So that is to be watched out for as well. Some small names included Josh Engineering or a Steel Cast, maybe even a Fortis that came out yesterday. All of these should be kept in mind. So, you know, everything from a Biocon, which had the best ever quarter, to a Leyland, to Bikaji, to Linde, all of them stood out. Now, the weak numbers, Amara Raja, you could argue was a bit weak. Revenues up 11% at 2429. The estimates were 2622, so lower than estimated. EBITDA margin 9.77 versus estimated 14.4. Net profit 41% uptick at 139, but the estimates were 177. There was an exceptional loss because of which this happened. Maybe otherwise the numbers would have been slightly better. But you look at the margin performance, and that tells you a story that the quarter was weak. Thyrocare, abysmal quarter, really forgetful quarter. Let me put it that way. Revenues up 4% at 135 crores. The estimates were 136. But look at the EBITDA margins, 18.17 versus 28.79. The estimates were 24. So shaved off quite meaningfully from the kind of margins that it is clocking as well as the estimate. Now, the point is only, and by the way, the net profit too is down 12.49. The estimates were 20 crores. The point is, when we recently did this show called Insight with Thyrocare as well as Aditya Khemka, they mentioned that now that the base effect of COVID wears off, Q1 onwards, we'll probably see a more meaningful relative comparable performance. Be that as it may, you can't take away the fact that the numbers looked weak relative to the estimates as well, and that is the problem for Thyrocare. I would suspect a negative reaction. Galaxy Surfactants, revenues down 7.45% at 974 crores. EBITDA margins at 13.8 versus 13.7. Net profit, though, lower than estimated. Maybe correct. Polyplex certainly will correct. Look at those numbers. Revenues down 11.6% for Polyplex. EBITDA margin 3.32 versus 20.1. Just unreal the kind of shave off that has happened in the last 12 months. Net profit down 93% at 20.27 crores. Very weak numbers. Should correct. Metro Brands, again, revenues were okay, but EBITDA margins much weaker than estimated and much weaker than the corresponding quarter. Net profit down too, as a result of which, despite a 35% uptick in revenue, you saw a net profit coming off because of the weakness in margins, and certainly may have a bit of a problem. What else? I'm just trying to see if I've missed out. Dishman Carbogen, back to single-digit margins actually, and that is not great. It had 18% margins last quarter. It's now at 8%, so not great. Tamil Nadu Petro Products, again, EBITDA more than half, so that one will correct. We've already spoken about Galaxy Surfactants. And GET&D India, not a great number. EBITDA was 28 crores versus 46 crores QOQ, so that was weak. And versus EBITDA margin to correcting, there's a net loss of 15 crores, so that looked very weak. We've spoken about Metro Brands, certainly weak. Amara Raja, certainly weak. Somani Ceramics was a weak number and a wobble. J Kumar Infra was a slump in order inflows. So all of these stocks could well be in focus in the session today. I'll watch out for Container Corp. MK has an interesting note there. They say that the OI is down 25% in the last 2 weeks for Concor, but there's a high delivery volume and a drop in OI, which suggests a profit booking after a 12% rise since April lows. They believe a short trade looks attractive with entry at 655, stop loss at 665, target 605. And Cinema SGS, Norges Bank, bought about 38 lakh shares. Maybe that stock remains in focus today. So that's the long and short of the stocks to focus on. I would urge you to watch the Rajiv Jain interview that he's given to us. I asked him a bunch of questions around India, around infrastructure, around Adani, all of that. So that is something that you might want to tune in. We'll replay the conversation, of course, during the day today as well, 9:30 a.m., but already there on the social media handles. So you might want to tune in for this. And then a clutch of other conversations lined up with managements during the day today. So that could be interesting. There is Ashok Agarwal, Shenu Agarwal of Ashok Leyland at 8:30, Prashant Jain of JSW Energy at 10:45, Rishabh Jain of Pikaji Foods at 11:30, Nissan Joseph of Metro Brands at 12:30, and a few others too. All right here. Siddharth Mittal of Biocon at 1:30, Saurabh Gupta of Dixon at 1 p.m., Amitabh Mukherjee of NMDC 12:40, and Rahul Guha of Thyrocare at 2:15. So the two which have done well, which is Biocon as well as Dixon Technologies too in focus. So clutch of conversations today on BQ Prime. You might want to tune in for some of those. Do tune in for the Rajiv Jain conversation for sure. It has turned out to be a really good one. A lot of insights there from a man who manages such large pools of money globally. So do try and tune in. Thanks so much for being on the Trade Setup today.
If others don't invest, it doesn't bother me. In fact, I like the fact some index funds are selling because it allowed us to buy some stuff, right? Sure. I mean, that's as close to dumb money as it gets. I mean, I don't understand. A short seller writes a report and why is MSCI reducing weights in the indices? Some of this is total nonsensical. But look, if people weren't doing stuff like that, we wouldn't get an opportunity to buy either. And I'm not trying to be arrogant here, but I mean, there's some mandatory selling that happens when indices reduce weights, right? So I don't see a problem in their ability to raise capital at all.